Good morning, students. Namaskar, Sasrikal, Swagatam, Vadakkam, Kencho. I believe you all are doing very good and you are studying very hard to achieve the goal of your life to become a chartered accountant as soon as possible. So I am C. Ankit Sharma, your income tax faculty, and I am back for your some topics which we will be taking: TDS, advanced tax, TCS provisions. Then we will take the return filing procedure topic, and the last chapter, the calculation of total income and computation of tax and optimization of tax liability also. So first of all, let me take the wishes, and it's good to see you all again. Good morning, sir. Happy to see you again. Same is here, Harsh. Okay, Nagaraja. Thiyosami, good morning. Shamli, good morning. Dhanlakshmi, good morning. Achitya, good morning. Neeraj is saying, welcome back. It's good to see you all again. Good morning, Lakshita. Good morning, Dhanlakshmi. So I believe you must be studying very, very hard. Okay, so whatever we have discussed in earlier classes and the other faculty have taught you in the earlier classes, I believe that you are actually going through all those provision, start revisions, etc. to achieve the goal, of course, of your life. So today we will be discussing the provision of TDS, advanced tax, and TCS. So that topic is very, very relevant for the purpose of your examination, because at least I believe at least 4 to 5 marks provision would be from these topic in every attempt. And the good news is every topic is a very small topic, not very large topic like salary. No. So TDS are in separate parts. So we have to discuss these provision in a very short, we can say in a short provisions. So they are not interconnected technically. But the bad news is there are multiple provisions on which we have to discuss the concept of TDS, tax deduction at source. Advanced tax is also there, which is based upon your estimated tax liability if it exceeds 10,000 or more. And there are TCS also, which is based upon some specific transactions. So, of course, in this class, there will be, of course, a story and a thought for the day, and we will discuss provisions also one by one. Akshita is saying, finally, sir, you came back. Okay, so good to hear that. So, first of all, this is thought for the day for all of you, and this is one of my favorite thought for the day, and it has actually happened. It is a practical thing. So first of all, whatever you want to achieve in your life, you have to dream about it. You have to dream about it. That is very important. If you become a chartered accountant, you have to dream about it. But dream need to be executed. So after you dream about something in your life, you have to plan according to it. You have to plan your studies. You have to plan your day's schedule, how you're going to study, the revision part, the classes, etc. So you have to plan it very, very wisely. And once you planned everything, it needs to be executed also in practical. So you have to then do it. So dream it, plan it, do it. So if these three things are in sequence, and if you balance all these three things, then definitely you are going to get it. So you will be a chartered accountant. You have already dreamed it. You are already planning for it. And of course, every one of you doing it. So if you are doing everything correctly, there is no one who can stop you, and you will be a chartered accountant very soon. So dream it, plan it, do it, get it. That was thought for the day. Moving ahead with the provisions. Before starting the provision, let me tell you what exactly we are going to discuss. So there are a concept which we have already gone through in the basic provisions. And the basic provision says that income of previous year will be assessed to tax in assessment year. That is its next year. I have taught you this thing. And at the time when we were discussing about these provision, so generally we think that whatever income we will earn, suppose we earn 50 lakh rupees in previous year 25-26. So I have told you that we do need to pay tax upon 50 lakh rupees in the next year. That is 26-27. So in the initial state, when we were discussing basic concept, the basic thing, what I have taught you is that income of previous year is going to be taxed in the next year. So a general concept in our brain would be like this, that whatever income we will earn in previous year 25-26, we have to pay tax upon it in the next year, that is 26-27. But that is not the whole correct story. Because at that time, we cannot discuss about the TDS, advanced tax, TCS concept or SET concept. So that's why in the starting phase, we just discuss these things like in the manner that whatever income you will earn in previous year 25-26, you have to pay tax on it in 26-27. But it is not the complete truth. There are certain ways in which government will collect on this 50 lakh rupees in the same previous year. Government will not wait till assessment year. Generally, we think, okay, if I'm earning something today, I have to pay tax on it in the next year. But that is not the truth. That is not the complete truth, we can say. So what government thought? What's the basic reason behind these collection of tax? Let me tell you in a very simple language. Suppose Mr. A in previous year 25-26, he's a salaried employee. And suppose his salary is 5 lakh rupees per month. So in April 2025, he get 5 lakh rupees salary. So as per the basic concept provision, if I'll ask you, when do we need to pay tax on this salary? So maybe we will say in next year 26-27. At the time of filing of his income tax return. And the return filing date would be 31st July 2026. So now you can see whatever income he earned in April 2005. So if we follow the basic concept that in which we have discussed that the tax need to be paid in the next year. So accordingly, the tax on rupees 5 lakh needs to be paid in July 2026. So it is almost 1 year and 3 months. So from April, May, June, July. So technically he is paying tax on this income after 15 months. In the same way, when he will get 5 lakh rupees salary in May, again he will pay tax on 31st of July. So after approximate 14 months, government is going to receive the tax on these kind of income. Same in case of business, etc. Because whatever we will earn, we will pay the tax at the time of filing of return. So government will say, no, we have changed this thing. Now, whatever tax would be arise on your salary income, how we will find it out? If you are getting salary of 5 lakh rupees per month, that means your yearly salary would be 60 lakh rupees. So in April 2025 only, listen very carefully. In April 2025 only, on the basis of 5 lakh rupees per month salary, on estimation basis, we will assume that your salary would be 60 lakh rupees in this year. And now we will calculate tax on this salary in the April 25 only. In April 25 only, you have to calculate the tax on estimation basis. Whatever will be your tax, and tax would be calculated as per normal, either default tax regime or optional tax regime, etc. The normal process, normal rates. Whatever would be the tax upon 12, this would be your TDS. So what is TDS? TDS is no new tax. It's just a collection process. So technically what we are doing, we are estimating his income of the full year, calculating tax of full year approximately, and we are finding out the tax liability of a month. Dividing by 12, that means the tax liability of a month we will find out. We will figure it out. And this suppose this tax liability is 1.5 lakh rupees per month. So now what TDS is doing? Now government say this 1.5 lakh rupees we need to be collected as tax, and the name would be TDS, in April 2025 only. So when he is getting salary in April 2025 of rupees 5 lakh, so government wants you to calculate the TDS on it. How we are going to calculate the TDS? We need to calculate the tax of the whole year divided by 12. So you will get the per month tax value. So now very interesting fact. Out of this 5 lakh, that employee will receive only 3.5 lakh rupees in his hand. 1.5 lakh rupees need to be deposited to the government. Now you might be thinking why it is necessary. The reason behind is very interesting. Now, as we discussed, that this 5 lakh rupees tax, which is approximate 1.5 lakh rupees, okay? This 5 lakh rupees tax, which is approximate 1.5 lakh rupees. If TDS would not be there, this 1.5 lakh rupees is going to be received by government in July, after 15 months. But due to the concept of TDS, now this 1.5 lakh rupees on that 5 lakh rupees salary is going to be collected by the government in April 25 only. So what is the benefit? If government is going to collect this 1.5 lakh rupees after 15 months, and now the government is collecting it in the first month in April 25, that means before 15 months. So can you tell me what is the benefit actually government will have by doing this amount? Tax would be same 1.5 lakh after 15 months or before. So what is the benefit government is having by receiving this amount 15 months before? What do you think? I believe it's a very simple thing to understand that why government is doing so. Priyajan is saying government get tax earlier. Yes, of course, government will get tax earlier, but what is the advantage? Correct. Dhanlakshmi is absolutely right. Government will have revenue and they will not miss. There are 2, 3, 4, 5 reasons we can say, but the basic reason, the major reason is government needs funds to run this country. Let me tell you, suppose your parents say that your pocket money is 5,000 rupees per month. Okay. And your monthly expenditure is 4,000. Understood? So your pocket money is 5,000 and your monthly expenditure is 4,000. So they will pay you 5,000 rupees at the starting of every month. So you won't have any problem because you will expense 4,000 rupees and you will save 1,000 rupees every month. Now suppose your parent says that we will pay you 5,000 into 12. That means full year pocket money at the end of the year. Not every month. We will pay you 60,000 rupees at the end of the year. Now problem will arise. You will get the money at the end of the year. But your expenditure you have to pay every month 4,000. How you will pay these expenditure? So that's why government say that, okay, you will pay tax to us after 15 months, 14 months. But we have to run the country. We have to develop the infrastructure. We have to provide free education, free ration, free medical facility, etc. We need salary to pay to our soldiers. So we cannot wait for 15 or 20 or 14 months. So definitely we need revenue every month to run this country. First reason. The second reason, when government will collect 5 lakh rupees 1 year before, so government can invest that amount somewhere and earn extra interest income. Suppose if I am going to receive any income before 15 months, so I can invest that income anywhere and I will get the interest income or any passive income on that investment also. Government is going to be received 15, 14, 13 months before. One more reason, that government will think that suppose this Mr. A, basic concept case, when Certain person can go outside India, certain person can avoid tax in the assessment year. So government just going to reduce that threat. Government wants to collect tax every month. So the risk of losing tax would be minimized. So there are multiple reasons. And of course, in the examination, there would not be any question that why TDS is there. I'm just trying to explain this way because you need to know that why TDS concept is there when sir says in the basic concept that we need to pay tax in the next year. Then why this collection of tax in the same year concept is there? Just because these basic reasons. So this is just for your knowledge why TDS is here. Understood? So TDS, even is there a TDS? The reason behind is same again against advance tax also, and the same against TCS. So these three taxes, TDS, advance tax, and TCS, they are all collection of tax in the same previous year. So these are going to be collected in the same previous year. That means 25-26. Only the set is actually you need to pay in the assessment year. This set is called self-assessment tax. So whatever is your tax liability would be in the assessment year. On the basis of estimation, government will charge TDS. TDS is on some specific incomes. We will go through with the provision of TDS. So there are some specific incomes on which TDS provisions are applied. And on those income, you have to pay tax at the time of you earn that income, not at the time of return filing. In the same way, some incomes are on which there is no TDS applicable. Advance tax. That means you have to pay your tax in advance, which you need to pay next year 26-27. That is going to be paid in advance, and it is applicable if your ETL stands for estimated tax liability. So if any person in our country whose estimated tax liability is 10,000 or more on the basis of estimation, then he need to pay that tax in advance. Suppose my estimated tax liability is 40,000 rupees. So that 40,000 rupees I have to pay in advance to the government on specific dates, specific percentage. We will discuss the provision in detail. This advance tax concept is not applicable for senior citizen, those having no business income. We will discuss all these provision in detail. I am just trying to tell you what is the ingredients of this chapter. So this chapter is all about collection of tax. There are three collection of tax in the same year. TDS based upon some specific income. Advance tax, this is based upon your estimated tax liability. TCS, this is upon certain transactions, not income, certain transactions. What are those transactions? We will discuss. Even after paying either TDS or advance tax or TCS, some tax needs to pay to the government. That tax you can pay as a self-assessment tax at the time of filing of return. Now let me show you in a simple example how TDS or these taxes work. Suppose there is a payer, and there is a pay. Suppose payer pays a payment of 100 rupees to pay. Suppose he is Mr. A, he is Mr. B. Whether this is 100 rupees is salary or etc. anything. Since suppose this payment of 100 rupees does fall under TDS provision. So TDS concept is applicable upon this, suppose, okay? And TDS rate is 10%. So now how this transaction will operate? The payer should know that whatever payment I am making to the payee on which TDS concept is applicable. So this is the liability of payer. And now what payer will do? Now payer will pay only 90 rupees to Mr. B because TDS concept is there. So if TDS concept is there, then you will not pay the full amount to the pay. You will pay only 90 rupees to the pay. And this 10% on 100, that means 10 rupees TDS will be deducted from Mr. Pay payment. What will happen with this 10 rupees? This 10 rupees payment will be deposited to the income tax department as TDS. Whose responsibility is this? Payer responsibility. So payer will pay 90 rupees to the pay, 10 rupees to the income tax department as tax. Can you tell me whose tax this would be? Mr. A tax or Mr. B? Whose tax would be this 10 rupees? Would it be treated as Mr. A tax or would it be treated as Mr. B tax? Mr. Neeraj is asking, so if this person receives salary after TDS, so does he have to file ITL and pay tax again and return filing? Look, Mr. Neeraj, as we have discussed in the earlier classes, those classes I have taken, so I've always said just understand the concept, whatever I am telling to you right now. Your question, your query would be automatically answered in the chapter. But for the time being, let me tell you, yeah, return filing is a different concept. TDS deduction is different. That kind of person needs to file an income tax return. That would be covered in chapter 8. That is return filing procedure. But you have to pay tax also, but you will get the credit benefit also. We are discussing that topic right now. So that, of course, the correct answer is, of course, everyone correct have given the correct answer. Of course, that is the tax of Mr. B, which is now with the government. So government will assume that Mr. B already paid 10 rupees tax to us. Okay, now what will happen? Now Mr. B needs to file income tax return in assessment year. He is going to file his income tax return. Now what will happen? He will calculate his gross total income, including the salary or other income. There would be possibility. Okay? So gross total income, then total income after deduction, etc. Where under default tax regime he opt or optional tax regime. On this total income, he will calculate his tax liability. Whatever tax liability would be here, now this would be actual tax liability. There could be other income also. So whatever would be the tax liability, out of that tax liability, the TDS which has been deposited on the behalf of Mr. B would be deducted. So whatever TDS, TCS, advance tax you paid in the previous year, you will get the benefit at the time of filing of the return. Now suppose, I will take two cases. Suppose the tax liability is 12 rupees. Suppose the tax liability is 12. We have already paid 10 rupees TDS. So now you just need to pay 2 rupees tax to the government. Clear? Suppose case 2, your tax liability is only 6 rupees due to deductions, etc. Suppose your tax liability is only 6 rupees and you have already paid 10 rupees as TDS earlier. So now you will get 4 rupees refund. So when payer deduct your TDS or when you pay advance tax or when you pay TCS, that does not mean that your tax has been gone. This is just a kind of deposit. The deposit you have made to the government. At the time of filing of return, you will get the benefit of this tax, whatever you have paid. So if there is a tax after deduction of these TDS, TCS, etc., the tax liability would be assessed. It could be tax payable. It could be tax refunded. What could be the third case, of course? Suppose my tax liability is also 10 rupees. I have already paid 10 rupees TDS, so my tax liability would be now nil. So please keep this thing in mind that whatever TDS, advance tax, etc. collection you are paying, you will get the benefit at the time of filing of the return. That could result, even it could be a refund. So if there is a refund, then government will return your 4 rupees to yourself. So that was the basic concept that please kept in mind. There are no new tax. TDS, TCS or advance tax are no new tax. These are normal income tax, but these are the collection process. Whatever tax you will pay. Now, this 2 rupees tax, this is need to be paid as set. I have discussed balance need to be paid as set. This balance need to be paid as self-assessment tax. I hope it's clear now. So that was the concept of TDS, what we are going to discuss. Now under TDS provision, now let's back to the notes. So one by one, we will discuss each and everything in detail. So TDS concept, what is TDS, how TDS work, how to pay TDX, and how to avoid, etc. These all provision we are going to discuss in this topic one by one. Then we will have TCS concept and advanced tax. So these three topics we are going to cover under this chapter. And that, of course, the material is based upon your study provisions. I have just copied the study concept because study has been beautifully drafted. And there are so many cases that I cannot make my notes because everything has been explained in the study material beautifully. So now you can see deduction of tax at source and advance tax payment. There are three kind of collection: TDS, TCS, payment of advance tax. TDS, as I have told you, on the basis of certain incomes. TCS on the basis of certain transactions. And advance tax on your estimated tax liability. So each and everything is going to be discussed in detail. And let me tell you once again, do not think about it that do I need to file return after TDS? Why we need to file return when we have already paid tax? So return filing concept is not connected with TDS. When you need to file your income tax return, that would be in chapter 8 after this TDS chapter. Ronak is saying, sir, I'm unable to join Zoom. Can you share the watch these topic on YouTube? We are on live on YouTube and you can send your queries over here, Mr. Ronak. Okay, so these are collection method. Now, another payment of recovery of taxes from the employer through tax paid by him under section 192(1)(a) on the non-monetary perquisites provided to the employee. So that topic we have discussed in salary. The tax paid on perquisite by the employer himself. So if employer wants to pay tax by himself, then that perquisite tax can also be paid via himself under section 192(1)(a). These taxes are deductible from the total tax. So as we have discussed, whatever you will pay as a TDS, TCS or advance tax, you can get the deduction at the time of filing of the return. And the balance amount needs to be paid as self-assessment tax under section 140(a). After adjustment of TDS, TCS, relief, MAT. This is MAT, section 115 JD. So MAT and AMT provision. So AMT provision is going to be discussed in chapter 9, the last topic. So what is AMT? We are just skipping it right now. Now direct payment. Direct payment means which kind of payment needs to be made by assessee. Because as we have discussed, if I have any income on which TDS concept is applicable, that tax is going to be collected by the payer. I do not need to pay it. If estimated tax liability, then I have to pay it in the previous year. If there is TCS concept, then transaction based need to be paid in previous year. So there are two cases only in which assessee needs to pay tax by himself. And these two cases are Section 191 provides that in the following cases, tax is payable by the assessee directly. The first one, in case of income on which tax is not required to be deducted. So only those income on which TDS concept is not applicable. Tax is not required to deduct it. So let me tell you that TDS is applicable on certain specific incomes, not all on incomes. So if there are a certain transaction or certain kind of income arise, then you just need to follow the concept of TDS. So there are other income also on which there is no TDS concept. So in that case, assessee needs to pay tax by himself as advance tax or as a self-assessment tax. Or second case, if there is any income on which tax is liable to be deducted, matlab, payer needs to deduct the TDS, but payer did not. He forgot. So suppose Mr. A made payment to Mr. B of 1 lakh rupees, on which 10% TDS was required to be deducted. But Mr. A forgot and he paid full 1 lakh rupees to Mr. B. Else he need to pay only 90,000. But Mr. A forgot to deduct the TDS. So on this income, now Mr. B needs to pay the tax. And suppose if there is this case, this Mr. A payment made to Mr. B of 1 lakh rupees, on which no TDS concept is there. There is no TDS concept. On this income also, B needs to pay the tax. So this is case number 1. Any income on which TDS is not required to be deducted. On that income, tax needs to be paid by the assessee. Or any income on which TDS is applicable, but payer did not deduct the TDS. In that situation also, assessee needs to pay the tax in this case. Okay. In the view of this provision, the proceeding for recovery of tax necessarily had to be taken against the assessee. So either the tax need to be paid by assessee or government will start the processing for collection. And in this case, the person who did not collect the tax, the payer, he would be treated as assessee in default. So this is theoretical. You can go through it. The main concept start from section 192. So from this point of view, from this section, we will discuss how to deduct TDS and what is the TDS concept under different incomes. So first is salary. We have taken the example of salary initially also, that on salary income, TDS required to be deducted. And how to calculate the TDS on salary is very simple. Whatever would be your estimated salary, in April only, we will find out. Whatever would be your approximate salary for the whole year, we will calculate the tax on that salary. And it would be divided by 12. So every month that amount would be deducted as your TDS. Suppose someone joins the organization on 1st of November. Somebody joins the organization starting his job from 1st of November. Then what we will do? We will calculate the estimated income from November, December, January, February, March. 5 months. That would be treated as his total income. We will calculate the tax on that income. Whatever would be the tax, we will divide it by 5 because the remaining months are 5. So that would be per month TDS deduction. Now we will discuss these provision. Okay, Tiwari Radheshyam asked a good question. So the question is this, and the concept is going to be discussed in grossing up of TDS. But you have asked right now, good question. Tiwari Radheshyam asked that suppose Mr. A pay 100 rupees to Mr. B, as we have covered in the example, 10% is TDS. So Mr. B received 90 rupees only and 10 rupees has been deposited as his TDS to the government. Now Mr. Tiwari Adeshyam asked that when we will calculate GTI or Mr. B income, will 90 rupees would be his income or 100? So what is your opinion, student? How much we should consider in the income of Mr. B, 90 rupees or 100? We have discussed this kind of concept in salary topic already. Neeraj asking, sir, taking for calculation, so will we take allowance? Everything need to be considered as normal salary income for the calculation of TDS, Neeraj. Okay. Shamli is saying 100, Neeraj is saying 100, Jendra is saying 100, Nagaraj is saying 90, Diya is saying 100, Lakshita is saying 100, Harsh is saying 100, Kuldeep is saying 100. Dhanlakshmi is saying, sir, what if Mr. A did not deposit to income tax department? So in that situation, we have just discussed that payer would be treated as assessee in default. And there are interest applicability, penalties applicability on Mr. A. These are the provision we will discuss later. Already has been given in the chapter. Gross total income means including tax. So it could be 100, Dhanlakshmi is saying. Aditya is saying 90. So the correct answer is, of course, 100 rupees. Gross means before tax, before TDS, before tax, what was the actual income? And we have discussed this kind of concept in salary topic. You might be remembered in salary, we have discussed whether it is earned or received, accrue or received, whichever is higher or earlier. So his income was 100 rupees. His income was not 90. His income was 100 rupees. He received 90. Even he received 0. Still his income would be considered as 100 rupees. So under income tax, we always need to consider the income that is before deduction of TDS, which was his income, whether received or not. Okay. So moving back. So in case of salary, the calculation has been given, but let me tell you the calculation is very simple and it says you have to calculate the tax considering normal provision and that tax need to be divided by the remaining months of that year. So you will get the per month TDS. So this section casts an obligation on every person responsible for paying any income. So the responsibility upon the payer. And who is the payer in case of salary employee? Employer needs to deduct the TDS. The manner of deduction says such income tax has to be calculated at the average rate of income tax. Now, what is average rate of income tax? The average rate of income tax we can calculate with this formula. Total income tax, simple mathematics, upon total income. Your example also into 100. So you will get your average rate of income tax in force for the relevant financial year in which the payment is made on the estimated total income. So we have to calculate the estimated total income. We have to calculate the estimated tax. On the basis of that estimated tax, we will calculate average rate of income tax. What is the formula? Total tax upon total income into 100. We have example also for this. Of the assessee where the employee intimates to the employer his intent to exercise the option of shifting out of the default tax regime. Average rate, how to calculate? they have explained average rate of income tax means the rate arrived by dividing the amount of income tax calculated on the total income besides total income. Deductor, being an employer, has to seek information. So employer needs to ask to employee, do you want to pay tax as per default tax regime, or do you need to pay tax under optional tax regime? Accordingly, he will calculate your tax and your TDS liability. The concept of payment of tax on non-monetary perquisite has been provided in section 192(1)(a) and 1(b). So the example of this and how to calculate TDS has been given in illustration 1. So let's discuss this. Now you will understand how to calculate TDS in case of salary. So Mr. A, the employer pays gross salary including allowances and monetary perquisite amounting to 7,30,000 to his general manager. Beside, the employer provides non-monetary perquisites to him whose value estimated at 1,20,000. So on this 1,20,000, the tax could be paid by employer himself, or this could be the part of employee salary and tax will be bear by the employee. It depends upon the situation. The general manager exercising the option to shifting out of the default tax regime and pay tax under the optional tax regime as per the normal provision. What is the tax implication in the hands of Mr. A and employer and general manager? So this would be your salary. The non-monetary perquisite, your total salary deduction. So this would be your income. On this income, we need to calculate tax as per optional tax regime. The tax would be 75,400 rupees. So normal tax would be 72,500. Then 4% cess you will applicable, that would be 2,900. So my total tax liability would be 75,400. Average rate tax calculation, tax upon income into 100, that would be 9.425%. Now Mr. A can deduct 75,400 at source from the salary of the GM at the time of payment. So when he will pay, he will collect 75,400. That is for full year TDS. So if you need to calculate the monthly TDS, that would be this value. Clear? But now, alternatively, now the question is this. If suppose employer take the responsibility, employer wants to take the responsibility to pay tax on non-monetary perquisite. That means employer wants to pay tax on 1,20,000 himself. He will say, no, my employee will not bear this tax. I want to bear this tax. So in that case, with the help of average rate of tax, we can find out the tax liability upon these non-monetary perquisite. That would be 11,310. So the balance now need to be recovered from employee would be 64,090. How? Earlier tax was 75,400. Out of this, employer take the responsibility to pay tax on non-monetary perquisites. So now employee tax liability would be only 6490 divided by 12 per month TDS liability. So if Mr. pay tax on 11,310 on non-monetary perquisite, the same is not deductible expenditure from the profit of employer. And this 11,310 also would not be treated. It's a non-taxable monetary perquisite payment, which is not chargeable in the hands of the employee also. So this concept we have discussed in salary topic, and this you might have already gone through under PGBP provision. And in this chapter, we just need to understand what is the applicability on TDS. So if employer take the responsibility, that amount will be removed from employee tax. So the TDS liability would be lower. So these are for your reading purpose. In this chapter, actually, the self-reading part is huge actually, because generally procedure has been explained one by one. So these are the procedure you can go through. If there would be any problem, you can ask me in the next class, not an issue. Furnishing of a statement. These are processing part, and for the purpose of examination, the reading is enough. The basic concept, the technical part I am discussing with you for each and every sections. Estimation. So these are that you have to inform to your employer, you have to submit some form according to which the employer will calculate your liability, like requirement to obtain evidence, proof, and particulars. Now there's nothing technical. If I will read with you. So this point is saying that if employee is claiming any exemption, suppose house rent allowance exemption or any exemption, then for the purpose of calculation of tax, he needs to submit evidence to his employer that yes, I am staying in a house, the rent is this much, so you can allow me a house rent exemption. So he will estimate his salary by considering those exemption, which is claimed by employee. So employee needs to submit the proof of that. Like subsection 2D cast responsibility on the person responsible for paying any income under the head salary to obtain the SSC, evidence of proof, etc. So there is nothing technical, and you can see for which exemption, which is the evidence we require. For HRA, the details required. For leave travel concession, details required. Income from house property, details required. Deductions, detail required. So because this chapter is almost for 100 pages and we have 3 lectures, so we need to at least cover 30 pages every lecture. So those part which is very easy to understand, nothing technical, procedure part, that I will ask you to read yourself. So we will focus more on the technical part. So in case of salary TDS, there's a different kind of calculation that you have to calculate your full year salary based upon the exemption, etc. Then you have to calculate the tax. And then the tax would be divided by the remaining months, and that would be your TDS liability. In other sections, the provisions are slightly easy. Like the next is interest on security. In other TDS concepts, if you are earning these kind of income, so you need not to calculate your full year income or tax liability. That procedure ends only in case of TDS on salary. In other incomes, there is a specific rate. There is 10% rate, 2% rate, 1% rate also. So if you are earning these kind of other incomes, which we are going to discuss one by one, so a specific rate of TDS is there, and you have to deduct your TDS only with that rate, and that would be the end of the TDS amount. So that is more simple, very simple in comparison to TDS on salary. Because in case of TDS salary, you need to calculate the full year income, full year tax, etc., etc. In other case, that is not so. So now this is the second case, and it says interest on securities. That means if you purchase any bonds, debentures, some government securities, etc., on which interest arise. Like in case of shares, we receive dividend. So we are talking not about dividend, we are talking about the interest. So in case of bonds, debenture, government security, etc., if you are receiving interest income, so in this case, suppose Mr. A is receiving income. So Mr. A is payee. Who is the payer? Of course, the person who issues those bonds, debenture, etc. And what is the name of the payment? The payment is interest on security. So if you receive interest on security, and if these interest on security does fall under section 193, then the payer will deduct TDS at the rate of 10%. If the amount exceed 10,000 rupees in a financial year. So if you are receiving interest, suppose 8,000 rupees in a year, no TDS. 9,000 rupees, no TDS. 10,000 rupees, no TDS. But suppose if you receive 11,000 rupees, then TDS on full 11,000 at the rate of 10%. So always remember that in most of the cases, if the limit exceed, the TDS would be applicable on the full value, not on the excess part. Understood? So very simple concept. We just need to understand the concept. You can see the section casts responsibility on every person responsible for paying to a resident. Suppose I have purchased Reliance company bonds on which I am going to receive interest. So Reliance is the payer, I am the receiver. If I am receiving interest in the full year, more than 10,000, then Reliance will deduct the TDS of 10% and will pay the remaining amount to me. Of course, I can claim that TDS amount at the time of filing of my return. Okay. So income by way of interest on security being the amount or the aggregate of the amount exceeding 10,000 during the financial year. So other sections are very simple in comparison to salary. What is the meaning of interest? If you have any security on which there is interest accrued, whether it's debentures, other security, etc., that is the meaning of interest. So we all know that. The rate of TDS is 10%. So it would be applicable if the amount exceeding 10,000 on the full value. Time of deduction, it says accrue or received, whichever is earlier. So this is almost in every TDS provision, the TDS need to be deducted whichever is earlier. The tax should be deducted at the time of credit, that means accrue, of such income to the account of the pay, or at the time of payment thereof in cash or by issue of a check or draft or any other way, whichever is earlier. Okay. Let me see if there's any query. Arun Sagar is saying, I have a doubt that is if company fail to deduct TDS, they are not allowed to deduct that expenditure 30%, not if outside India. Why income tax department taking benefits from employee and employer as not allowed that deduction? No. Arun, only in case of non-taxable perquisite. Only in case of non-taxable perquisite, this provision has been applicable. Section 192(1)(a) you are asking. So in other cases, as you have said, that in normal expenditure, whether it's commission expenditure, other salary point, if TDS not deducted, that the company can claim 70% deduction. And if the payment is outside India in case of salary to a non-resident, then there would be no deduction. But we are not discussing that concept. We are discussing only one component of salary. Salary is the component of basic, advance, allowances, perquisites, multiple perquisites, etc. But if there is any non-monetary perquisite on which the liability to pay tax has been taken by the employer, we are only discuss that concept. So if the liability to pay tax has been taken by the employer, in that perquisite tax value, the employer cannot claim that tax as deduction. Why? Because that tax has not been taxable as the income of the employee. So this is the universal rule of income tax. If something cannot be claimed as income, then that thing cannot be claimed as expenditure also. Suppose I am an employer, you are an employee. I have paid you some 15,000 rupees non-monetary perquisite. On that 15,000, suppose the tax is 3,000 rupees. So that 3,000 as an employer, I cannot claim as deduction. I can claim 15,000 perk value as a reduction, but the tax amount 3,000, I cannot claim the reduction. And that 3,000 would not be taxed in your hand also, because it's an obligation of employee met by employer, but it would not be taxed in your case also. So the benefit is given to the employee technically. Arjun is saying, sir, if I receive interest more 10,000 from different persons, so this 10,000 limit is from the payer point of view. So if payer is paying you more than 10,000, then TDS need to be deducted by him. Okay. नॉन एप्लीकेबिलिटी, तो देखो भाई टीडीएस में ना देर आर सर्टेन थिंग्स यू हैव टू learn, basic main things. So in case of TDS, you always need to learn these major 5 points. First is who is payer. The second thing, who is payee. Third is rate of TDS. These are main things you have to learn from every section. Rate of TDS. The fourth thing, the amount limit. Like in this section 193, it was 10,000. So there are certain, you can say, individual amount limit. Only on exceeding those limits, TDS would be applicable. And there are some exceptions. So please, in my opinion, in every section, whatever TDS provision we are discussing, these 5 points are utmost important. On the basis of these 5 points, majorly the question which is going to be framed in the examination would be there to find out these 5 things in that question. So these are the main 5 ingredients to solve a question of TDS in the examination. Like in the starting, we have discussed section 193 that this is TDS on interest on security. So that does not mean that on all kind of interest on security, the TDS need to be deducted. So now in point number 5, we are discussing non-applicability. So these are exceptions. So TDS is applicable on interest on security, but there are some securities on which this TDS need not to be deducted. So if it is national development bonds, 7-year national savings certificate, debentures issued by some specific public sector company, society, etc., on any security of central government or state government, except these. So TDS need to be deducted if this is 8% saving bonds 2023 scheme, 7.75% bonds 2018 scheme, floating rate notes saving bonds 2020, or any notified security. In this government security, TDS need to be deducted if payment is more than 10,000. Other than these, any other government security, no TDS. So no TDS. But on these government securities, TDS required to be deducted. On securities of LIC, GIC, subsidiaries, etc. So these are 5 exceptions, 1, 2, 3, 4, 5. And the fourth is having one itself exemption. Generally, point number 4 says no TDS on government, central or state government security. But even in central state government security, these 8% one, 7.75% second, and floating rate saving bonds. On these 3 government security, TDS required to be deducted. That was section 193. Now, 3.3 is for interest other than interest on securities. This is section 193 was for interest on securities. Now section 194A says this is interest other than interest on security. So if there is any other interest except interest on security, then TDS provision would be applicable under section 194A. So can you tell me an example? Which kind of interest would fall under section 194A? Neeraj is saying FD interest, fixed deposit interest, correct? Very good. FD interest, RD interest, interest on loan, etc. Suppose I have given loan to a person and he's paying interest to me. So that kind of interest would fall under section 194A because these are not on securities. FDs are not security. These are depository receipts. So saving account interest, FD interest, RD interest, post office interest, or any interest on loan, etc. So those interests, those are not interest on security. On that interest, Section 194A provision would be applicable. Okay. Again, as I have told you, you have to focus on who is the payer, who is the payee, amount limit, rate, and exceptions. So these main points you have to focus in every section of TDS. Now, till now, there was no confusion in payer. Payer were, every payer was included. But from section 194A, there would be some specific payer need to be excluded. Applicability of section 194A. This section apply only to interest other than interest on security credited or paid by assessee other than individual or HUF families. Now, what the mean of this thing? So this kind of pair is going to be included in multiple TDS provision. So for section 194A, they say for the purpose of pairs, individual HUF, only those pair whose turnover is exceeding 1 crore rupees in the preceding financial year. So our previous year is 25-26. So if in the previous year 24-25, any individual HUF who is payer, that means who is paying interest to any payee. So suppose this is Mr. A and suppose this is Mr. B. He is paying interest and this interest does fall under section 194A. But individual HUF, if he is the payer, then he can only deduct TDS if his turnover of the preceding year, not current year, preceding year, this payment is being made in previous year 25-26. But we have to check the turnover of last year. If he is a businessman or more than 50 lakh rupees, if he is professional, if his receipt is exceeding 50 lakh rupees, and if it's a business, then if turnover exceeding 1 crore, then this individual HUF can deduct TDS. So if this condition fulfill, he can deduct TDS. If condition do not fulfill, these pair cannot deduct the TDS. Plus, other than individual, etc., all include. Like if the pair is a partnership firm, then turnover does not matter. He can deduct, it can deduct TDS. If pair is a company, it can deduct TDS. If pair is a LLP, it can deduct TDS. No turnover needs to be checked. So in case of section 194A, only individual HUF, those are covered if their turnover exceeding 1 crore. So we can write it down, this provision, in a simple language also for the purpose of learning. We can say under section 194A, all pairs included except individual HUF only if exceeding 1 crore, exceeding 50 lakh in previous year 24-25. So that would be more easy to understand for the purpose of examination. So this is in detail what I just explained, but you can, for the purpose of learning, you can follow this concept that for section 194A, all payers include individual HUF, AOP, BOI, etc. But the provision says except, all pairs includes except individual HUF. But individual HUF will be included only if the turnover of last year exceeding 1 crore or the receipt exceeding 50 lakh in case of profession. So only in that situation they can deduct the TDS. Now suppose question say Mr. A is an individual, turnover less than 1 crore in previous year 24-25. He is paying interest to Mr. B. And question say, can he deduct TDS? So the answer would be no. He cannot deduct TDS. Suppose that's a partnership firm. Turnover less than 1 crore. In previous year, 25, 24, 25. Payment of interest to be TDS can deduct? Yes. So turnover does not matter in case of partnership firm, company, etc. Under section 194A, individual HUF turnover is relevant. They can deduct TDS if their turnover exceeding 1 crore or 50 lakh in case of professional receipt. Understood? So this kind of individual HUF would be at least in 5 or 7 sections of TDS. So in those 5 or 7 sections, all persons are included as payer, except individual HUF that would be included only if their turnover exceeding. So we are considering technically big businessmen. Those turnover exceeding more than 50 lakh, 1 crore or receipt exceeding 50 lakh rupees. So you can see this section applied only to interest other than interest on security created or paid by assessee. So these are payers. But one payer has been excluded. Other than individual HUF. However, an individual HUF family whose total sale or turnover exceeding 1 crore or 50 lakh in case of profession during the immediately preceding financial year, that means 24-25, is liable to deduct TDS at this section. So generally individual HUF exclude, they are not payer. On that case, section 194 is not applicable. But if that individual HUF turnover exceeding the specified limit, that yes, they can deduct the TDS. Time reduction same, accrue or payment, whichever is earlier. You can go through with this clarification under CBS system. Now, what is CBS system says? The concept says, in now banking cases, banks follow CBS system. And the core banking solution system, the CBS system says that if there is a client, suppose there is Mr. X, he has account in Bank of Baroda, separate branch, suppose Bank of Baroda, Kamla Nagar, Bank of Baroda, Lakshmi Nagar, Bank of Baroda, Green Park. He is earning interest income 20,000 from this branch, 30,000 from this branch, 40,000 from this branch. So for the because now banking follows CBS system, core banking solution system. So even if you are having account in different branches of the same bank, then for the purpose of TDS, the combined amount would be taken into account. So combined account amount would be 90,000. So now for the purpose of interest, we will consider the interest value 90,000, not separate. Branch wise need to be deduct, not need to be deduct. It should be bank wise. So if this 90,000 exceed the limit, then TDS need to be deducted. Understand? And if they are separate banks, like this is Bank of Baroda, this is HDFC Bank, this is ICICI. In that case, separate needs to be checked. 20,000, 30,000 and 40,000. Let me tell you, the limit is 50,000 for the purpose of TDS. So in this case, now TDS need to be deducted at the rate of 10% because core banking solution system applicable. And if the example is like this, then there is no requirement of TDS because these are not branches of same bank. They are separate banks. So that is the CBS system, how it works. So regarding that, the provision has been given over here. You can read it that in case of CBS system, we will take the full value, combined value from the all branches of the same bank. And that interest is generally accrued day wise also. So day wise, it's not possible to calculate. So it would be considered at quarterly basis or half yearly basis or yearly basis as per the banking policy. Rate of TDS is very important, and that is 10%. Now the non-applicability. The provision says no deduction of tax shall be made in the following cases. So if the aggregate amount of interest paid or credited during the financial year does not exceed 10,000 rupees. So we have just seen the 50,000. 50,000 is applicable for bank. Now what is the case? Suppose there is Mr. A and there is Mr. B. Clear? A is going to pay interest of rupees 15,000 to Mr. B because A have taken some loan, and against that loan, A is now paying the interest. So suppose in the financial year, A is paying 15,000 to B as an interest. So because A and B, the pair would fall in category A. If the pair is bank, cooperative society or post office, then 50,000 limit would be applicable. But if the pair is other than bank, society or post office, then limit of 10,000 would be applicable. Like this. Suppose the pair is bank, cooperative, post office. In that case, limit would be more than 50,000. Then TDS would be applicable. If pair is other, then limit of 10,000 would be applicable. In this case, suppose if the payee is senior citizen and the payment is made by bank, society or post office, then limit would be now 1 lakh rupees. That has been given over here. So if the aggregate amount of interest has been paid by other than bank, post office, society, then limit 10,000. If it is exceeding 10,000, TDS required to be deducted, as in this example. The limit is 50,000 when the payer is banking company, society or post office. In respect of point number 1, 2, 3, the limit would be 1 lakh if the payee is the senior citizen. The limit will be calculated with respect to income credited or paid by a branch of a banking company or society or a public company in case of time deposit, that means FD. It is based on FDs. So we are discussing the exception. So exception point number 1, what is the exception? If it is not exceeding 10,000, no TDS requirement. If it is not exceeding 50,000, no TDS. If it is not exceeding 1 lakh in case of senior citizen, no TDS. So this is exception number 1. Then if interest is paid or credited by a firm to any of its partner, then again no TDS. We are discussing exceptions. So first exception was if it is not more than 10,000, no TDS, not more than 50,000, no TDS, not more than 1 lakh, no TDS. The second is this section 194 is not applicable when the interest has been paid by firm to its partner. Can you tell me the interest paid by a firm to a partner is taxable in the hands of partner in which head of income? If interest has been paid by a firm to its partner, then the partner who received that interest income is taxable under which head of income? Arjun is saying, Nagarjun is saying other source, Arun is saying PGBP, Jainder is saying PGBP, Harsh is saying PGBP. Shraddha is saying other source, Diya is saying PGBP, Neeraj is saying other source. So the correct answer is PGBP. A partner who receives salary or interest from the firm is taxed under PGBP head. And normal interest is taxed under income from other source head. Section 194 is applicable on those interest income which is generally taxed under income from other source. And because interest received from partners, received by a partner from firm, would fall under PGBP head, so that is not going to be treated as real interest income. That is a PGBP income. That's why there is no TDS concept is applicable. Mustafa is saying, so Mr. B takes bond of some security from Mr. A, and Mr. is individual paying interest on it, and Mr. A has more than 1 crore income previous year, then he can deduct TDS and deposit to government. If he is not exceeding, then he cannot deduct. Yes, correct. But let me tell you, in the bond is cannot be issued by an individual. So that case would be for section 193 if you are writing it down bonds. Don't write it down bonds. You could change it to loan, etc. So if the case is in a loan, then definitely your assumption is correct. If yes, in LLP also same provision would be applicable. LLP and firm having same concept. Okay. Clear, Mr. Mustafa? Your question is correct, but you should replace the bond with the loan because bond cannot be issued by any individual. Clear? Chalo. Moving ahead. You can see again the TDS concepts are more of learning. There is nothing much technical if you are able to find out the correct pair in the question. If you are able to find out the correct rate of interest, the exceptions, and the amount, you can get the full marks. Let me tell you, it's very easy to solve an examination. So if you remember the rate, etc., and exception, etc., it's really easy to find out or to score full marks in TDS provision. And that even not take more than 1 or 2 minutes in the solution because there is no huge solution. Just you need to apply the rate and that is our TDS amount. That's it. So it will not take not even 1 minute if you learn all the provisions of TDS. Again, interest paid or credited in respect of deposit under any scheme framed by government notified. So if notified scheme by government, then there would be no TDS, then there would be no TDS. So you just need to read these points. Income paid or credited by a cooperative society other than a cooperative bank to a member thereof or to such income credited or paid by a cooperative society to any other cooperative society. So if there is a cooperative society who pays interest to its member or to another cooperative society, then there would not be any TDS till now. But this is going to be explained in detail. Point number F says interest income credited or paid in respect of deposit with primary agricultural credit society. So again, no TDS if the interest income is paid to primary agricultural credit society or any deposit which is other than deposit made on or after with a cooperative society. So again, the interest payment to a cooperative society is not taxable under TDS. To the member agricultural credit society, again non-taxable, but there is explanation. There was no TDS, but TDS would be charged if these two conditions has been fulfilled. So initially point number E says that if I am a cooperative society and interest has been paid to the members, no TDS. If interest has been paid to another cooperative society, again no TDS. But if these two conditions fulfill, then if interest paid to the member, TDS required to be deducted. If interest paid to a cooperative society, other society, TDS need to be deducted. However, cooperative society referred to in point number E or F, liable to deduct TDS if these conditions fulfill. The condition is the total sale, receipt or turnover of the cooperative society exceed 50 crore rupees. We are talking about the society who is paying, the payer. In the financial year, immediately preceding the financial year in which interest is credited. So the turnover should exceed more than 50 crore in previous year 24-25. And both conditions should be satisfied. The amount of interest or the aggregate of interest credited or paid should exceeding 1 lakh rupees in case of paying being a senior citizen and 50,000 in any other case. So now what is the whole concept? The concept says that if any cooperative society paid interest to any member or another cooperative society, then there would not be any TDS. But if the payer turnover exceeding 50 crore and the payment exceeding 1 lakh or 50,000, then TDS required to be deducted. So they have explained it again. Thus, such cooperative society is required to deduct tax under section 194A if payment made to the members or to a primary agricultural society or another cooperative society when these two conditions fulfill. So as a sum, you can understand, if you are a cooperative society, then payment to members and another cooperative society or agricultural cooperative society, interest need not to deduct TDS. But if your turnover exceeding 50 crore and the payment is exceeding 50,000 or 1 lakh, then TDS required to be deducted. Other points are now simple. Interest income created or paid by central government under provisions of income tax. So if any interest has paid by central government on your refund, etc., then there is no requirement of deduction of TDS. Interest paid or credited to the following entities. Now, if bank is payer, then they will deduct TDS. But if these entities are payee, if I am going to pay interest to the bank, then I cannot deduct TDS. When I will pay interest to the bank, generally bank pay interest to us, like on FD, RD, etc. Is there any case when we can pay interest to the bank? Can you give an example when individuals can pay interest to the bank? Of course, very simple case. In case of loan. Exactly. So in case of loan, generally bank is paying and we are the payer. But in that case, we cannot deduct bank TDS. So if banks are payer, they can deduct TDS. But if they are pay, then we can deduct the TDS. So if they are pay, like bank, financial corporation, life insurance corporation, companies, unit trust of India notified, you cannot deduct the TDS if they are pays. Motor accident claim interest cannot deduct TDS, J point, K point. That's for your reading purpose. Generally, the main points I have discussed, that banking case, the 10,000 limit, 50,000, 1 lakh, cooperative society case, rate of TDS, and payer. You need to learn these main points. So illustration number 2, this is for your homework. And let me give you a very interesting. The third is very, very interesting. I will see who can solve this. I want the solution in the next class. I want to check. The third case answer is there. You can see in the illustration, the answer is given, but you need to calculate. It is saying the bank interest of 28,000 falling due on recurring deposit, so and so, since such interest does not exceeding the limit. So you need to calculate how this 28,000 arrived. The details are not given in the solution. So this is a very interesting question. In the next class, you need to tell me how this 28,000 has arrived. Okay. Or during the break, if anyone can you give me the answer, how this calculation has been made. So after break, you can tell me the solution, how this 28,000 has been arrived. First and second point is very easy. You can go through. If there would be any problem, we will discuss it. Now, winning from online games. Arun Sagar is saying, sir, what about loan between banks? So again, when the payee is a bank, there could not be any deduction of TDS. So whether the payer is individual, whether the payer is the bank, other does not matter. Exception says if payee is the bank, LIC, etc., then no TDS can be deducted, irrelevant who is the payer. Next is winning from online games. So the provision says, or we can do one thing, we can take a short break, and after that break, we can proceed for the further concepts. If there is any query, let me see. Okay, no further queries. So Ashokji, can we take a short break of 10 minutes? etc. So we were discussing the provision of TDS. Let me take the queries if there is anything. Okay, the query is from Monisha is asking on query portal that sir, for calculating TDS on salary, we are finding the estimated taxable income and divided it by 12 to find per month tax liability. Then why to find average tax rate? So, Monisha, we need to find out the average tax rate for taxability of the perquisite. If there is any non-monetary perquisite on which the liability to pay taxes taken by the employer. In the example, you have seen that 1,20,000 rupees non-monetary perquisite on which the liability of paying tax has been taken by the employer. So how we will calculate tax on 1,20,000 rupees? As per the basic exemption limit, there would be no tax. So for that non-monetary perquisite limit, we have to find out the average rate of tax. That's why. Okay. Okay, let's see. Neeraj Kumar has solved the example. I have asked students to calculate the interest. In example, to the 2 lakh is per month deposit. So we have to calculate 0.67% interest on accumulated balance. By doing this, we have to calculate till, no, your answer is 28,140. It should be accurate. It should be 28,000 exactly if you need to calculate it correctly. Thiyaswamy is 2 lakh into 12, 42 into 8 upon 1200, 28,000. RD is for 6 months. I call off 1 month. How this is, it should be 24 lakh. Hiram is saying 2 lakh is deposit monthly on regular basis for 6 months. Correct. Therefore, the interest paid by the bank will be after the deposit is paid for the month, due to which monthly interest wouldn't be same and the total interest would be 28,000. Recurring deposits for 6 months, 0.67. The interest is 28,000. I believe somebody must have cracked it. Okay, so it's really good to see that you actually tried between this break time. Some of you have tried that question, and that is what required to become a chartered accountant. You should not stop trying. If you'll try, you will maybe fail, but you will try again and you will learn something when you will fail. So failure is not bad. You always learn something from your failure. Shamli, RD is in October, correct? 1,333 and November 2667. October it should be February 5333. December, January, February, March. Total interest is this one. Sure. Let me solve this for you. It's a simple mathematical calculation. Actually, the question was tricky. The question was saying, Rajesh started a 6 months recurring deposit of 2 lakh rupees per month. From 1st October, he is depositing 2 lakh rupees per month. So if you ignore that 2 lakh rupees per month and you are trying to calculate interest on 2 lakh rupees only, so you cannot find the correct answer. So you can see he start the RD on 1st October 2025. So technically he deposit 2 lakh rupees in October at the rate of 8%. And this 2 lakh is going to be deposited till 31st of March. So technically we are going to earn on this specific 2 lakh rupees October, November, December, January, February, March. That means I am going to receive 6 month interest. That would be 8,000 rupees. And so on. 1st November 25, the payment of 2 lakh. 8% interest. So interest would remain 16,000 in every case. But this will earn me 5 months interest. That would be 6,667. Same on 1st December 25. The RD, this value would be 16,000 in all case. But this will earn 4 month interest. That would be 5,333. On 1st January, when I'll deposit the 16,000, I will get only 3 month interest on this value. That would be 4,000. February 26th, the 16,000 will give me only 2-month interest, that would be 2667. And in March, of course, I will get only 1 month interest. That would be 1334. The total would be 28,000. Okay. So that's why, because it's 28,000, it's less than 50,000, 1 lakh limit, as payer is the bank. So there would not be any TDS applicability on this. I hope it's clear, students. Yes, you guys are actually overthinking. It is a simple interest question. You need not to bother that much regarding it. So I believe that if any one of you have gone through with this question and actually find out that 2 lakh rupees per month is investing, then there is just a matter of time to calculate interest on each installment till 31st of March. Okay. Everything is simple. Nothing is difficult neither. Chalo, let's move on. So winning from online games, so that's Dream 11, etc. The online games we are talking about. So if you are playing any online games and if there's any winning, then the TDS is applicable on that also. Simple provision. Any person responsible for paying to any person any income by way of winning from online games during the financial is required to deduct TDS at the rate of 30% on the net winning in person's user account. Okay. TDS on withdrawal. So in case there is withdrawal from user account during financial year, tax would be deducted at the time of such withdrawal on net winning comprised in such withdrawal. In addition, tax would also be deducted on the remaining account on net winning if the user account has computed in prescribed manner at the end of the financial year. So TDS would be deducted in two cases: at the time of withdrawal, and even if no withdrawal has been made, then whatever the balance in your account at the end of the financial year, TDS need to be deducted. Net winning, wholly in kind or partly in cash and partly in kind. So in that case, the payer responsibility is to deposit the TDS. Where the net winning are wholly in kind or partly in cash or partly in kind, but the part of cash is not sufficient to meet the liability of deduction of tax in respect of whole of the net winning, the person responsible for paying shall, before releasing the winning, ensure that tax has been paid in respect of the net winning. So the app on which you are playing, so the person who is responsible for deduction of tax, that's responsibility to pay the tax to the government. Suppose you are playing a game and the winning is in kind. So the FMV of the gift you are receiving, suppose 50,000. So there is no cash involved. You are going to receive a gift in non-monetary form. So 30% of it, that means 15,000 requirement of TDS need to be paid by the payer. Whether he will charge from the winner or whether he will receive the amount of tax earlier and then provide you the gift. So that is the headache of the payer. The meaning of certain terms, power of CVD issues some guidelines. You can go through with this chart to understand the concept. There are some questions also to clear your doubts. So you can go through these questions. This is important to understand. There's a problem arise in these kind of cases. There's a large number of gamer who plays very insignificant amount. Maybe there could be a winning of 2 rupees, 10 rupees, 5 rupees. And on each winning, deposit of TDS could be a headache to the payer. It's very, very difficult because if somebody is paying and playing and earning, suppose the winning is like 10 rupees, then depositing 3 rupees TDS and every day if he's doing and depositing of TDS for those winning, it's very difficult. And when the users are very large quantity, because all over India, people are playing and earning 5 rupees, 10 rupees, 15 rupees, 49 rupees and paying TDS on their behalf could be a very messy thing for the payers. So government has made a relaxation for ease compliance, and tax may not be deducted on withdrawal on satisfaction of all of the following conditions. So if all these three conditions fulfill, then tax need not to be deducted on withdrawal if the withdrawal does not exceed 100 rupees in a month. If the withdrawal is less than 100 rupees, then there is no requirement of TDS, but all three conditions must be fulfilled. The first, the withdrawal should not be more than 100 in a month. The second, tax not deducted on account of this concession is deducted. So On 100 rupees, less than 100 rupees per month withdrawal, you are not deducting tax, but the tax should have been deducted at a time when the net winning comprised the withdrawal exceeds. So whenever the withdrawal exceeds more than 100 rupees, suppose in this month you withdraw 20, in the next month you withdraw 30, in the next month you withdraw again 40. So in the month the aggregate withdrawal exceeding 100, tax should be deducted in that month or at the end of the financial year if there is no such withdrawal. So this condition should be satisfied. And the deductor responsibility to deposit the tax. If that is not sufficient discharge tax liability, then the payer liability to deposit the tax by himself. There are other questions here. You can go through these questions, but the first was very important. Third is also important. You can read it. Now, very important section 194C. So when I say this is very important section, that does not mean the other section we have gone through are not important. So it is more important, but you have to focus, you have to learn all the provisions of all section. We have gone through with section 192, salary, then 193, then 194A, interest on security, other than interest on security. Then this section 194BA and now section 194C. Now 194C is for contracts and subcontracts. So this is talking about work contract situation. So if there is a work contract between a contractor and a contractee, then TDS required to be deducted as per section 194C. So the payer would be called contractee and the pay would be called contractor. So suppose Mr. A wants some work to be done by a contractor, then A would be the payer, he will be called contractee and the pay would be called contractor. So if there is any work contract, then TDS concept will applicable. It should be a work contract, not for sale purchase of material. If there is sale purchase of material contract, then no TDS. It should be a work contract. Then section 194C would be applicable. Now the TDS rate would depend upon contractor status. The contractor should be a resident in India. The requirement is resident in India. Again, payer is all payers includes. But the same case we have discussed in section 194A, but individual HUF include if more than 1 crore, more than 50 lakh in 24-25. So if individual HUF if does not cover in this 50 lakh or 1 crore criteria, then no need to deduct TDS. The rate of TDS would be depend upon the pay constitutional status. Whether if it is an individual HUF, the TDS rate would be 1%. Others, the TDS rate would be 2%. So this individual HUF does not matter whether more than 50 lakh, 1 crore. The payer need to fulfill that condition. If you are a payee, the condition is only you should be a resident in India. If you are a non-resident, then section 195 concept would be applicable. That is at final level. In all cases, the payee should be resident. Payee. If payee is not resident, then other concept would be applicable. That is not in our syllabus. Now, there is a very interesting fact that these kind of work could be subcontract also. There could be a possibility of subcontract also. So, if suppose Mr. A assigns some work to Mr. B and Mr. B subcontract that work to Mr. C. So there would be two contracts. One contract between Mr. A to B in which B would be the payee and A would be the payer. A could deduct TDS if he fall in this category. But if that amount has been subcontract by Mr. B to C, then C should be resident. Then whatever payment will made by Mr. B to Mr. C, again section 194C provision would apply and the rate again depending upon C status. If C is individual HUF, 1%. If C is other, then 2%. So there could be two separate contracts. In this case, we will find out the TDS liability separately. Suppose this contract value was 2 lakh rupees and B subcontract it for rupees 1,60,000 to Mr. C. So do not combine the TDS concepts. Find out the TDS liability separately between A to B contract relationship and a separate liability between B to C. So treat it separate questions. Suppose A gave a contract to Mr. B, then find out the TDS liability. And do not consider the B2C contract as a subcontract. You can imagine it as a separate contract between B2C and then apply the condition and then you can find out the TDS liability. In this case, B would become the payer. In case of contract B and C, B would become the payer and he will deduct the TDS on behalf of Mr. C. So very interesting sections, payment to contract and subcontractors. The basic point has been given over here. You can go through it. The detailed provision we are going to discuss. Applicability of TDS under section 194C. Section 194C provide for deduction of tax at source from the payment made to a resident contractors and subcontractor. Tax has to be deducted at source under section 194C by any person responsible for paying a sum to a resident contractor. And now you can see who can be the payers. And they include everyone in payer definition except that individual HUA. You can see in point number 12. Any person being an individual HUF, AOP, BOI whose total sale, gross receipt or turnover from business or profession. In generally individual HUF, those turnover exceeding cover in other section, but in section 194C, AOP, BOI also would be covered only if their turnover exceeding 50 lakh or 1 crore in the preceding financial year. Time of deduction is same, the time of credit or payment, whichever is earlier. Rate of TDS will depend upon the status of the payee. It would be 1% or 2%. We have already discussed. Okay. Now the limit. As I've told you, what are the important points in every TDS section? Payer, payee, rate, TDS limit, and the exceptions. That's it. Threshold limit for deduction of tax at source under section 194C. And it is 30,000 for each contract. Now what happened? No deduction will be required to be made if the consideration for the contract does not exceed 30,000. However, to prevent the practice, now what problem arises when department has made the concept of this 30,000? Under section 194C, section says if each contract, if not more than, if any contract exceeding 30,000, then TDS would be applicable. Now to avoid this concept, how we avoid this concept, the payer start doing this thing. Suppose a contract between A and B is for 1 lakh rupees, or we can say for 2 lakh rupees. So if that is exceeding 30,000, so TDS required to be deducted. No one wants to follow the provision of TDS. If you'll think, then payer don't want to deduct the TDS of pay because of many reasons. Because it increases the compliance procedure on payer. He needs to deduct the TDS. Then he needs to deposit it to the government. Then he needs to file a quarterly return also. There are requirement of return filing of TDS also. And if he default, he needs to pay a penalty, 200 rupees per day also, that could be there, and interest also. So nobody wants to follow these compliance procedure. So to avoid this process, what they start doing, they have made multiple contract of 20,000 rupees, 10 contracts. So now each contract is less than 30,000. So there was no requirement of TDS. So they technically dodge these provisions. So to avoid this, department has amended that TDS required to be deducted if any contract exceeding 30,000 or aggregate contract in a year exceeding 1 lakh rupees from the same pay. So even if now you make separate bills or separate contracts of 10. But due to this limit now, if the aggregate exceeding 1 lakh rupees, in that situation, you have to deduct the TDS. So this limit has been amended by the department. In contract value less than 30,000 to avoid tax deduction, it has been provided that tax will be required to be deducted at source where amount credited, paid or likely to be credited or paid exceed 30,000 in a single payment or 1 lakh in the aggregate during the financial year. So 1 lakh would be the same pay. Suppose I am having a contract with separate 10 contractors of 20,000 each. So separate 10 pay are there. So this limit is not applicable. So if the same pay is there, then each contract 30,000 or an aggregate when exceeding 1 lakh, then TDS required to be deducted on full value. So separate contracts is suppose 20,000 each. Till fifth contract, no TDS. The sixth contract will make the value 1,20,000. Then TDS required to be deducted on full value. As I've discussed earlier also, once the limit has been increased or exceeded, then the full value would be liable for TDS. Therefore, even a single payment does not exceed 30,000. If the aggregate exceeding full value, TDS required to be deducted. This is your illustration number 3 for your homework. Easy illustration. What is the meaning of work? Kindly read it. Read work means anything which is connected to work. It could be anything, job, work, etc., whatever it is. Non-applicability. No deduction is required to be made from the sum created or paid or likely to created or paid during the previous year on account of a contractor during the course of business of plying, hiring or leasing goods carriages if he furnishes pen to the deductor. PAN matlab permanent account number. So have you read anything regarding this kind of business, plying, hiring or leasing goods? You might have been discussed these provision under PGBP head. So can you tell me the section in which there was specific provision under presumptive taxation scheme for this kind of business? Aditya asking, sir, how 16,000 taken? Aditya, beta, 2 lakh rupees, 8% interest. Okay, somebody has already responded to him. Okay. $44 AE. Neeraj is saying 35 AD. Where 35 AD plying, hiring or leasing equals Neeraj or Nagaraja? Where 35 AD? That is section 44 AE. Jayendra Pokale is correct. Section 44 AE, you must have been gone through. 44 AD, no Dhanlakshmi, that is not 44 AD, it is 44 AE for transporter. So if you do not own more than 10 motor vehicle in a previous year, then you can pay tax under presumptive taxation scheme under section 44 AE, that is rupees 1,000 per tonnage capacity sort of. So this is actually talking about those section 44 AE concept transporter. So if you are a transporter on which section 44 AE concept is applicable, and if you furnish your pen, then the payer will not deduct TDS upon you. Here are the concept. If you owns 10 or less goods carriages at any time during the previous year, condition 1, is engaged in the business of hiring of goods and carriages, condition number 2, and has furnished a pen, condition number 3. So if these three condition has been fulfilled, suppose there is Mr. A and there is a transporter who fulfills section 44 AE condition. Now Mr. A gives him a work contract for, of course, transportation of his goods, and the contract value is 2 lakh rupees. So he is paid. He is paid. So generally the limit exceeding 30,000 and 1 lakh. But if this transporter fulfill condition 1, 2 and 3, then payer will not deduct TDS. Okay. Meaning of goods carriages you must have been gone through in section 44 AE. Important points, you can read it. Simple provisions. Illustration. This is for your homework, students. There is one case we need to discuss, and that was regarding work contract definition. Yes, this is important. Now there is a case of job work. In the section 194C we are discussing, there is a concept of job work. Now there would be a cases in which suppose there is Mr. A and there is a job worker Mr. J. Mr. J needs to manufacture something on behalf of Mr. A, and in that case, if there is a job work including material is there, job work including material is there, so there would be a situation when the job worker will raise a bill upon Mr. A after his work. So there could be two situations. Case number one, if in case of job work, suppose the job worker raised an invoice and separately shows material value 1 lakh rupees, labor charges 50,000 rupees. In this situation, TDS would be deducted only on labor charges under section 194C by Mr. A, if all other conditions are satisfied. So if the invoice has been separately show the labor charges, then TDS need to be deducted only on the work contract value, which is 50,000 rupees. But suppose in the same case, if the invoice has been raised as 1,50,000 job working charges, including material value, which has been not showing separately. So if the invoice does not show the full value, then full 1,50,000 would be liable to section 194C concept. So in case of material, if it has been separately shown, then on material section 194C provision will not be applicable because it is only on work contract. But if the material value has not been shown separately, then full value needs to be considered under section 194C and would be required to TDS. Monisha is saying, sir, can I watch your old lectures of PGBP, other source for better understanding? Is there any major amendments between these financial years? Definitely there are amendment, Monisha, because the old lectures of PGBP and other sources and capital gain on portal available on YouTube, that is for assessment year 25-26. And this is now 26-27. So there would be capital gain would be a lot of changes. So I will not recommend you to go for capital gain classes, but PGBP other sources you can go through, but still you can go through with the new study materials. So if there's any change in that, so you can find it out. But basic concept, yes, you can have some detailed knowledge or for better understanding, you can go through it. But please kindly check that with the study material notes. So if there is any section which has been changed, so you can go through with notes. Either you can understand the provision via lectures also. So that was the case of invoice. The provisions has been given over here, so you can go through it. That was section 194C. Then now section 194H. Let me see if there is any query. Okay, no more query. Now commission on brokerage. So commission on brokerage under section 194H. But we have actually three sections for commission. One is section 194D, 194G, and this is 194H. D and G will also be discussed in this chapter later. D is for insurance commission. So if you are earning commission on insurance business, so that will fall under section 194D. G is for commission on lottery ticket. So if you are a lottery agent, and you are getting commission from the company, that would be liable to deduct TDS in section 194G. But this is other than. So this commission is other than 194D and G. So any other commission except insurance commission and lottery commission would fall under section 194G. Sorry. What we are discussing over is other commission except insurance and lottery commission. So what are other commission like property commission, sale purchase of material commission? It could be anything except insurance and lottery agent commission. The basic concept has been given over here. You can go through it. Now the concept is saying any person other than individual HUF. Again, the same concept of individual HUF. Only that individual HUF under section who covers under section 190, covers section turnover exceeding 1 crore or professional in case of more than 50 lakh. That individual HUF has been included. And if your turnover does not exceeding 1 crore, does not exceeding 50 lakh, that individual HUF has not been included. Let me tell you one thing. This not inclusion is for the benefit of those individuals. This is very interesting. Section 194A, section 194C, now section 194H. Till now, these three sections does not consider payer any individual HUF less than 1 crore, less than 50 lakh. These three sections does not consider these kind of individual as payer. So it is for the benefit of individual HUF. Why? Because I have just told you, if you fall under the payer definition, then you have to deduct the TDS. You have to deposit this TDS to the government. Then you have to file the TDS return quarterly also. So that's not an easy task. So for those businessmen, those turnover is less than 1 crore, less than 50 lakh, running a small business, how they would be able to compliance with these deduction, deposit and filing of TDS return? So they need to hire a professional and that will increase their expenditure. So for their benefit, the small individual HUF, those turnover is less than 1 crore 50 lakh, outside the purview of TDS deduction. So that is for their benefit. If you are thinking, why those businessmen, why those individual HUF less than 1 crore has not been included? So that is a good news for them. They do not need to do the compliances of TDS. So those individual HUF turnover more than 1 crore, more than 50 lakh, government consider them as a big businessman. So they can do the compliances. So that's why when the individual HUF does not include in the definition of payer, that's a good news for them. Okay. So again, they are excluded from here. Time of deduction again, whichever is earlier, same. If the aggregate commission you are receiving more than 20,000 in the financial year, more than 20,000 in the financial year, then TDS required to be deducted. Clear? And the rate is 2%, only 2%. Majority cases rate are 10%, but in this case 2%, 194C it's 2% or 1%. Non-applicability, the section is not applicable to professional services, means services rendered by a person in the course of carrying on legal, medical, engineering, architectural, etc. case. Okay. Payment of applicability of television channels and publishing houses to advertisement company for procuring or canvassing for advertisement circulars. There are two types of payment involved in the advertising business. First is payment by client to the advertising agency. In this kind of payment, TDS is applicable. So when client make a payment to the advertising agency, TDS concept is applicable. But when advertising agency made the payment to television channels or newspaper, there is no TDS liability. So total, there are three kinds of payment which flows. You can take the screenshot also because there are three kinds of payment. Section 194H. There are three kinds of payment. One is payment by client. Payment by client to advertising agency. TDS would be applicable in this case. The second is payment by advertising agency to television or news channel. No TDS. Or we can say media company also. Now there's a third kind of payment also exists, which says a media company or television channel to advertising agency in the form of discount, etc. No TDS. So these 3 points you have to learn. So there would be a kind of payment from client to advertising agency, then TDS concept would be applicable. But if payment by advertising agency to television channel, no TDS, or even vice versa, there would not be any TDS liability. So you can note down this also, take a screenshot, or you can write it down yourself later. On the basis of this, you have to solve illustration number 5 also. These are the kind of question which is going to be asked in the examination. So TDS is very, very easy from the examination point of view. So you might be seeing that there are multiple provision in every section. But for the purpose of examination, as I have told you, remember payer, pay, rate, amount, and the exceptions. That would be enough for the purpose of solving a question. Now rent. Under section 194I, TDS on rent. So in case of rent, there would be a tenant and there would be a landlord. Clear? So tenant would be the payer and landlord would be the payee. So if the payment has been made in the form of rent, TDS required to be deducted. But if the payment is for use of machinery, etc., the rate of TDS is 2%. And if the payment is for any building, etc., other than plant and machinery, then rate would be 10%. Applicability and rate of TDS, any person again other than individual HUF. So it was section 194A, 194C, 194H, now 194I also. Individual HUF, only that include those turnover exceed the specified limit. Rate is again 2% for plant and machinery equipments, other 10%. Time of deduction, whichever is earlier, as always. Threshold limit is 50,000 rupees month or part of a month. So if you are paying rent as a tenant and the amount is more than 50,000 rupees, then only TDS required to be deducted. Up to 50,000 rupees, there is no requirement of TDS deduction as a payer. Rent means when you have anything for use and against that you are paying something, that is called the rent. So the meaning of rent has been explained. Rent means any payment by whatever name called under any lease, sublease, tenancy or any other agreement for the use. So if you are using something, if you have a right to use something and against which you are paying any amount to the payee, that would be called a rent, whether it's for land, building, machinery, plant, equipment, furniture, fitting or anyone. Whether or not or all of the above are owned by the payee or not. This is a very interesting question. Applicability of TDS provision. Now it's a question for cold storage owners. Now suppose there is a farmer who store his agricultural produce in a cold storage. And for that storage purpose, the owner of the cold storage charges rent from the farmer. Suppose it's 2 lakh rupees. So the question arises whether this rent will fall under section 194I in the definition of rent or not. So what is your opinion? The cold storage rent would form part of the rent under section 194I or not? Rent covered in rent? Yes, of course. Arun is saying no. Shamli is saying no. Arun Sagar, it's agricultural. So the person who is receiving it, the cold storage owner, that is not agricultural. No? He is receiving the rent. Agriculture income could be for the farmer if he sold those produce in the market, not for in this case. Nagaraja is saying no. They should leave agriculture sector. Agriculture depends upon the person who is earning income. In this case, earning income is the cold storage owner. So he is not the farmer. So there is no exception in this case. Okay. No, no, no. Aditya saying no. Lakshita saying yes. Dhanlakshmi saying no because agricultural, no. Look, TDS is not applicable under section 194I in this case because the TDS concept will cover when you have right to use something. So when you store your goods into a cold storage, you do not have any right in the premises of cold storage to use. You just need to store your goods, but you do not have any access to the cold storage except the storage of your agricultural produce. You are not the right to use the cold storage. So that is not a concept of rent in this case. In this case, section 194C applicable as a work contract. So that's a very good question for the purpose of examination. You can see that the main function of the cold storage is to preserve perishable goods by means of a mechanical process, etc. The customer is also not given any right to use any demarcated space or place of the machinery of the cold storage and does not become a tenant. Therefore, 194I not applicable. Yes, section 194C will be applicable because it's a kind of a work contract. Okay. The same case, almost same case of an airline to airport operator. You can read it. It's a good example also for the purpose of examination. Question point number 8 for your reading students. This is also a good example for your examination. It says if you have paid any deposit, refundable amount for a lease, then and also paying the lease rental. So on lease rent value, TDS concept would be applicable. But if you deposit some amount in a lump sum consideration at the starting of the lease, which is refundable, that would not be liable for TDS purpose. If that deposit is used in the future, if you ask the landlord that, okay, I am not able to pay rent this month, so you can use a portion of my deposit as a rent for this month, then that portion would be liable for TDS. But if there is something which has been deposited as a lease value, which is a lump sum in the starting, which is not going to be treated as rent, then TDS cannot be applicable in this case. Monisha is saying that the payer has to file TDS quarterly. How come this is possible? So, in the quarter in which the limit has not exceed, you will not charge TDS. In the quarter in which the limit exceed, the aggregate limit exceed, in that quarter you have to charge the TDS, pay the TDS, and you have to file the TDS return also. If there is no TDS has been charged, you can file a nil return. But in the quarter in which the aggregate exceed, in that quarter you have to pay the tax also and you need to file the return also. And let me tell you, the TDS required to be paid monthly basis. Return needs to be filed on quarterly basis, but TDS payment is generally required to be made monthly. The next month, 5th day, 7th day in some cases. even of core of the property, if the rental value exceeded, if the payer is paying rent more than 50,000, then TDS required to be deducted. Let me tell you how to remember the provision of TDS. Make short notes of these sections. And in every short note, you just need to write it down 4 or 5 points. Payer, pay, rate, amount, and main exceptions. So that would be really easy to learn all the provision in a summarized way, because these notes are very huge and in very much details. So that is also important, that you should go through all the provision, but please make short notes so you would be able to learn the main provisions of the TDS. This is for your homework, students. Now section 194IB. In section 194I, we have seen that individual and HUF, those turnover does not exceed 1 crore or 50 lakh, as the case may be, was not liable to deduct the TDS if they are tenant. But if you are an individual or HUF less than 1 crore and less than 50 lakh, if they are paying rent, so they have been excluded from section 194I, but they have been included under a new section of section 194IB. So if you are an individual or HUF whose turnover is less than 1 crore or 50 lakh, then TDS required to be paid if payment of rent made by that individual HUF, if these condition has been fulfilled. So for those individual which has been excluded from section 194I, for those individual, a new section has been inserted. That is section 194IB. Applicability and rates of TDS. So you can see only one person or pair has been included, that is individual HUF. Other than those turnover exceed 1 crore and 50 lakh, because those turnover exceed 1 crore 50 lakh, those has been covered in section 194I. So other than those, that means those individual HUF, those turnover is less than 1 crore or less than 50 lakh in 24-25 financial year, has been covered if they are paying rent. Another condition of section 194IB fulfilled. The rate is 2% only in any kind of rent. The threshold limit is same, 50,000 per month or part of the month during the previous year. But the interesting thing is this. Under section 194I, if TDS required to be deducted on rent, then TDS required to be deducted every month. Suppose if the rent is 60,000 rupees per month, and that is for a building rent. So 10% TDS rate under section 194I. So every month we have to deduct 10% of 60,000. That means 6,000. And we will pay 54,000 to the payee and 6,000 to the government. But if section 194IB applies, you can see the amount limit is same 50,000, but the time of deduction is very interesting. It says, as I've told you, government do not want that individual HUF, those turnover is less than 50 lakh or 1 crore, needs to do much compliances. So if you fall under section 194I, then you have to deposit TDS every month and return need to be filed quarterly. But if you are falling under section 194IB, then TDS rate is 2%, amount limit same, but you just need to deduct the TDS only one time, and there is no requirement of filing of TDS return quarterly. So the compliance limit has been reduced. That means you need not to pay TDS every month. Rent you will pay every month, but TDS deposit only for one time for the whole year. And there is no requirement of filing of quarterly return. So now this is very interesting for the purpose of section 190. The deduction is to be made at the time of credit of such rent for the last month of the previous year. That means if you are staying in that premises from April till March, so in March 26 only once you deduct the TDS of whole year. Suppose the rent is 60,000 per month. So 7,20,000. So the 2% of it need to be deducted only in March 2026 rental value. So whatever would be the 2% of 7,20,000, that need to be deducted. So in the March month rent, you will not pay 60,000, you will pay 60,000 minus 2% of 7,20,000 to the pay. So the full amount of TDS need to be deducted at once, either at the last month of the year or if you vacated the property before it. Suppose you vacate the property in December. Then from April till December, TDS need to be deposited in the month of December. So either it would be the previous year, the last month, or the last month of the tenancy. So we can learn it in simple March or month vacated, whichever is earlier. If you're not vacating the property, then March you have to pay the tax, TDS. And if you're vacating the property, in the month you are vacating the property, you have to pay the TDS of till that month in one time. If the property is vacated within the year, as the case may be, on the account of the pay at the time of payment thereof, in cash, via any mode, whichever is earlier. So that's why you need not to file return, because you need not to obtain 10 numbers. So tax deduction account number requirement for the payment of TDS return filing quarterly. And in this case, you need not to file your return quarterly. So there is no requirement of your 10 number. Meaning of rent same. Reduction not to exceed the rent of the last month. This is also important. And for this point, a detailed example has been given. So this is your homework, students. Section 194 IB. Now, fees for professional or technical services. Before starting it, let me see if there is any query. Arun is saying, is section 194I only apply for business usage? No. If you are a payer, other than that individual which has been excluded, and if you are paying rent for any purpose, whether for commercial or residential, etc., you have to pay tax. Okay? You have to deduct tax accordingly. Fees for professional or technical services. So student, you might be seeing that in these questions, in these provisions, you might be feeling it boring also, but this is very important for your examination. And let me tell you, no section is difficult. The problem is there are multiple sections, but there is good news. In case of payer, either in some case, all payers would be included, or in some case, all payers would be included except that less than 50 lakh and 1 crore are excluded. Or there would be a case only in which only those less than 50 lakh or 1 crore payers are included, as section 194 IB. The good news, pay would be always should be resident. Rates are majority 10%, and in some case it's 2 or 1%. The exemption limit the amount exemption limit you have to learn very cautiously, and thus some exception. The exceptions are very important from the point of view of examination, that in some cases the TDS is not applicable in certain category of person, certain category of contract, etc. So you have to go through with the exceptions also very cautiously. Now section 194J, and 194J is for multiple cases. So if you are paying any professional fees, then TDS would be deducted in section 194J. If there is any technical fees payment, if there is any royalty payment, and if there is any non-compete fees payment, and one more, if the payment is for director's fees. That is also part of the section 194J. And if the amount exceeding 50,000, why director fees has not been mentioned in this group? Because TDS required to be deducted if in these separate cases, the payment exceeding 50,000. If professional fees I am paying more than 50,000, then TDS required to be deducted. Technical fees I am paying more than 50, then TDS required to be deducted. Same in case of royalty, same in case of non-compete fees. But in case of director fees, there is no exemption limit. If I am paying director fees, whether it's 10,000 rupees, TDS required to be deducted. So these 4 points for exemption 50,000. And because director fees does not have any exemption, so that's why we did not include that in this diagram. That has been mentioned separately. Again, any person other than individual HUF. So now you can see section 194A was there, 194C was there, 194H was there, 194I was there, 194J also. So till now, these 5 sections says that we will not consider payer who are an individual or HUF having less than 1 crore or 50 lakh turnover. Okay. Fees for professional services, if we are paying technical services, any remuneration or fees or commission by whatever name called other than those on which tax is deductible under section 192 to a director of a company. What was section 192? It was TDS on salary. So they're saying if a company is paying salary to a director on which section 192 applies, that payment will not cover the section 194J. Obviously, because if TDS is need to be deducted under section 192, then it cannot fall under section 194J. So we are talking or we are including that salary or that payment by whatever name called fees, commission, etc. on which section 192 provision does not apply. Suppose I am a company, I am paying 10 lakh rupees as salary to a director. So on that 10 lakh, section 192 will apply and TDS will be charged accordingly. We are also paying to the director 3 lakh rupees as director fees. On that amount, TDS would be calculated as per section 194J. For royalty or non-compete fees, shall deduct tax at source at the rate of either 2% or 10%. For technical services, or royalty in the nature of consideration, distribution or exhibition of cinematographic films. And on all other case, the rate would be 10%, like director fees 10%, professional fees 10%, etc. However, in case of payee engaged only in the business of operation of call center, the rate should be 2%. Okay, let me tell you one interesting thing which you must are going to go through when you will revise this chapter. Under section 194C, when you will read that section, there is a point which says, if under section 194C, the payment made by payer to the payee, and if the payment is for work contract, generally what happened? TDS charge. But if that payment is for personal use, and the payer is individual HUF, which individual HUF? That is turnover exceeding 1 crore, etc. Because if turnover is less than 1 crore, then TDS provision is not applicable. So if under section 194C, the payer is individual HUF and the payment is for personal purpose. Suppose Mr. A turnover is 10 crore. He hired a contractor for his construction of residential house construction. And the contract fee is suppose 10 lakh rupees. So it is exceeding 1 lakh rupees or 30,000. Generally TDS should apply because he is an individual, turnover also exceeding 1 crore. But the benefit has been provided that if the payer under section 194C paid for the purpose of personal use, then there would not be any TDS liability. No TDS. You will go through when you will read the provision. Why I am telling you this thing? Because the same concept applicable under section 194J. If individual HUF, payer, and if payment for personal use, for only professional fees. This benefit is only for professional fees, not for technical fees, not for royalty, not for any other thing. Under section 194J, if the payer is individual HUF and payment is of professional fees, then again there would not be any TDS liability. I will mark that point over here. Time of deduction again, whichever is earlier. Threshold limit is 50,000 separately. Suppose Mr. A hire Mr. D and make him payment 40,000 for professional fees, 30,000 for technical fees, 35,000 for royalty. So the pay is same and the payer is also same. Aggregate is exceeding 50,000, but in this case, aggregate does not need to check. Aggregate is going to be checked if the combined professional fees exceeding 50,000. But these separate limits, each limit need to be checked 50,000 separately. Neither professional fee exceeding, neither technical fee exceeding, neither royalty exceeding 50,000. So these separate categories having separate limit. Yes, if Mr. D is receiving professional fees from Mr. A, 40,000 in July and 30,000 in September, professional fees, then 70,000 would be liable to TDS. But because he is receiving separate fees from the same person, so there is no TDS liability. So no tax deduction is required if the amount of fees or the aggregate of amount of fees credited or paid likely to be 50,000 in case of professional, 50 for technical, 50 for royalty, 50 for non-compete. But this is not for director fees. The limit of 50,000 194J is applicable separately for fees for professional, technical, royalty, non-compete. It implies that if the payment person toward each of the above is less than 50,000, then no TDS required to be aggregated. However, this 50,000 such exemption limit for deduction to any of the remuneration or fees of commission payable to director of a company. So no exemption for director. So if under section 194J, director fees is 10,000, then TDS required to be deducted in that case. Rates you can read from here also, summarized way, 2%, 10%, 2%, 10%, 10%. Limit also given over here, of course. In case of payee engaged in business of operation of call center, then TDS rate would be 2% in all case. This is for your homework, students. Non-applicability. This is the case I was talking about. If the payment is for personal purpose, there would not be any liability. This is the case. The same concept has been written in section 194C. An individual or HUF shall not be liable to deduct income tax on the sum payable by way of fees for professional service only. This benefit is only for professional service. In case such sum is created or paid exclusively for personal purpose. This is also important. Meaning of professional services, you can go through it, not as such relevant. Meaning of technical services, third party cases, please read it. Right to meaning of royalty, of course, has been mentioned over here. So till here, you should read the provision. In the next class, we will continue after from here, section 194M. So let me see if there's any query. Yes, director having no threshold limit at all, Mr. Nagarjuna. Anything else, students, you want to ask? You can ask. Arun Sagar wants to ask something. Can we unmute Arun Sagar?
Hello, sir.
Hello.
Sir, actually, I have a doubt regarding a payment. Sir, is there any restriction if I need to payment regarding cash? Otherwise, only you need to payment online to deduct TDS?
Cash payment restriction is PGBP provision. TDS does not say that you cannot make a payment in cash. But what will happen? Suppose if you make a payment in cash, you have to deposit certain amount of TDS. So TDS having no restriction. restriction on cash payment. But what will happen? That amount of payment you cannot claim as a deduction in your profit and loss account. So you
Yes, sir.
have to technically pay the extra tax on that value because that is not going to be allowed. But TDS does not say that you cannot make a payment in cash. अगर आप देखेंगे ना तो जो section we are reading ना in that section it has been written whether it is in cash or via bank mode or any other mode. So TDS does not have to do anything with the mode of payment. You need to deposit the tax to the government. That's it. But other consequences will be in other sections.
Okay. Sir, as per section 44 ADA,
Yeah.
is applicable for professions. Sir, in this case, it's tell us if you receive the cash in the form of the cash fees lesser than 5%, you no need to maintain 44 in books or audit. Okay, but as per this section is telling if you aggregate income is gross income more than 50 lakh, you have to deduct TDS. In this case, I need to maintain the books. Otherwise, it's very difficult, complex to make a payment.
No. Look, they said you do not need to maintain books of account, which has been prescribed in the Act. So in the Act, it has been prescribed that the books of account should be a ledger, cash register, bank register, everything. But it does not mean that you need not to maintain any books of records. So even if you does not fall in that category in a section 44 ADA, 44 AD, the requirement is that you have to maintain records, but not as per the specified books of account, which is mentioned. It has been specifically written. Then he can check regarding your expenditure and income, which you have shown in a section as a presumptive taxation scheme. So if you deal schemes, just give you a benefit that you should not make details of account as per required under the Act, but the documents and records should be there.
Okay. Sir, actually, I have one more query related to the 194C contract. Sir, you told, okay, if I'm making payment lesser than 30, means same, means small contract giving same person, lesser, it aggregate 1 lakh rupees, no need to take TDS. Sir, if I use the strategy, means I'm making small contract till the 31st March, after that, again, I give small contract, 1 lakh, then is there is a restriction?
No. If in the financial year it does not exceeding 1 lakh rupees, then there is a no requirement of deduction of TDS. If the individual contract is less than 30,000 and aggregate does not exceeding 1 lakh rupees. So if you can manage that thing that in a previous year, my contract value should not exceeding 1 lakh rupees. In that situation, you need not to deduct any TDS. But in the next year, if it exceeding 1 lakh rupees, then again the 1 lakh limit needs to be checked separately for the next financial year. So if you can manage in every financial year, the limit of 1 lakh is not going to be crossed in aggregate, then there is no requirement of deduction of TDS in that case.
Okay, thanks.
Okay. Anyone else? If there's no more query, then we can share a small story as we usually do every class. So story will be in Hindi as always. So एक बारी क्या हुआ कि एक छोटी लड़की थी जिसको मनी की बहुत रिक्वायरमेंट थी. सो शी वाज सर्चिंग ऑन द रोड कि उसको कहीं से पैसे मिल जाएं. तो एक पेंटर थे बहुत मशहूर, वो उन्हें जानती थी, उसने देखा था उन्हें कहीं पर, तो वो रोड पे जा रहे थे. तो वो उनके पास गई और उसने बताया कि मेरे को बहुत रिक्वायरमेंट है पैसे की, जेन्युइन रीजन. तो उस पेंटर ने कहा ओके. तो उस पेंटर ने एक अपना कैनवास निकाला, उनके पास अपने कैनवास था उस वक्त, ब्रश निकाले एंड 10 मिनट में उन्होंने एक पेंटिंग ड्रॉ करी और उस बच्ची को दिया और बोला कि एक गैलरी है रोड के उस साइड, आर्ट गैलरी, वहां जाओ और वो तुम्हें इस पेंटिंग के 1 लाख रुपीस दे देगा. तो उस लड़की को लगा ये तो पॉसिबल ही नहीं है, 10 मिनट में 1 लाख रुपीस किस बात के, कितने सारे तो पेंटर्स होते हैं. एंड वो फिर भी गई एंड उसने उस आर्ट गैलरी के ओनर को वो दिखाया, सिग्नेचर थे उस पेंटर के, एंड वो पेंटिंग देखी, उस आर्ट गैलरी के मैनेजर ने चेक किया एंड उसने उसे 1 लाख रुपीस पे कर दिए. वो लड़की वापस उस पेंटर के पास आई और बोली कि हाउ इट्स पॉसिबल, मतलब 10 मिनट में आप 1 लाख रुपीस अर्न कर लेते हो, इतना इजी है पेंटिंग करना. तो दैट पेंटर टोल्ड हर कि ये 10 मिनट नहीं है बेटा, मैंने ये 20 साल जो पेंटिंग पे अपने मेहनत करी है, 20 इयर्स 30 इयर्स, उसके बाद मैं उस लेवल पर हूं कि मैं हर चीज बहुत प्रिसाइसली बना सकता हूँ, एक एक लाइन, एक एक ड्रॉइंग, एक एक ब्रश. तो मुझे उतना एक्सपीरियंस और नॉलेज है कि मैं वो 10 मिनट में कर सकता हूँ. बट वेन यू थिंक इट्स अ 10 मिनट्स टास्क, इट्स नॉट 10 मिनट्स एक्चुअली. ये मेरे वो 20 इयर्स का एक्सपीरियंस और मेहनत है जिसकी वजह से अब मैं वो काम 10 मिनट में भी कर रहा हूँ. सो कोई और हो सकता है 2 आवर्स लगा के भी वो काम करेगा तो उसको वो पेमेंट नहीं मिलेगी, बट मेरा ये काम मे भी आपको दिखे कि 10 मिनट का है, बट एक्चुअली इसमें मेरे 20 और 30 साल की मेहनत लगी। सो वेन एवर यू सी एनी सक्सेसफुल पर्सन इन लाइफ और आपको लगता है कि ये तो इतना इजीली सक्सेसफुल है, वेदर इट्स अ स्पोर्ट्समैन, वेदर इट्स अ टीवी एक्टर, वेदर इट्स अ सेलिब्रिटी, वेदर इट्स अ बिजनेसमैन, एंड यू फील कि ये सब तो बहुत इजीली है, ऐसा नहीं होता। उसके पीछे उसका बहुत सारा हार्डवर्क होता है। वेन यू विल बी अ सीए वन डे तो मे बी लोगों को लगेगा कि ये तो बहुत आसानी से सीए बन गया होगा, बट हमें पता है, आपको पता है कि कितना हार्डवर्क हम उसमें पुट करते हैं बीइंग अ सीए। सो सक्सेस सिर्फ दिखती है सामने वाले को, बट द हार्डवर्क एक्चुअली मैटर्स। तो जितना डीपली अपनी अब पढ़ाई को आप करोगे अभी ड्यूरिंग दिस टाइम ड्यूरेशन, एग्जामिनेशन में आपके लिए क्वेश्चन पेपर उतने ईजी हो जाएंगे। एंड जब एग्जाम के बाद आप क्वेश्चन पेपर देके निकलोगे बाहर एंड मैन विल से कि मेरा पेपर अच्छा हुआ है, सो डजंट मीन वो 3 आवर में अच्छा हुआ है। वो 3 आवर अच्छे नहीं है, उसके लिए लास्ट 6 मंथ्स 9 मंथ्स से जो आप मेहनत कर रहे हो, इट विल डिपेंड कि वो 3 आवर्स में आप कितनी अच्छी तरह और इजीली अपने पेपर को अटेम्प्ट कर कर अच्छे मार्क्स लेकर आ पाओगे। सो फॉर व्हाट दोज 3 आवर्स यू हैव टू वर्क हार्ड फॉर अ ईयर और 2 ईयर और 3 ईयर्स। सो प्लीज डू हार्ड वर्क जितना भी कर सकते हो। प्लीज डू रिवीजन, एज आई ऑलवेज से रिवीजन से बेटर प्रिपरेशन का कोई तरीका नहीं। And we will see each other on 2nd of February, because now we have continuation class in 2nd, 3rd, 4th, 5th and 6th, 5 days continuation of class from 2nd of February, and all the best. पढ़ते रहो। Have a good day everyone. अशोक सर क्लास सेशन क्लोज कर सकते हैं? ओके, यस ओवर सर। थैंक यू सो मच, हैव अ नाइस डे सर।